Greetings, fellow resource enthusiasts, and welcome to Stocks Telegraph. Today, we're setting our sights on a glowing commodity: uranium. With nuclear power back in the spotlight as a clean energy source and global supply concerns mounting, uranium prices have been on an upswing. This has naturally turned the spotlight on uranium mining companies, and one company in particular is capturing the attention of investors: Denison Mines. Denison Mines isn't your average uranium junior. They boast the largest undeveloped uranium project in the infrastructure-rich eastern Athabasca Basin of Canada, along with interests in several other promising uranium assets. But with uranium prices still volatile and the overall market uncertain, is Denison Mines a worthy investment for your portfolio? Let's crack open the vault and explore the potential of Denison Mines. Before we delve into the details of Denison Mines, we want to hear from you. Are you bullish on the future of nuclear power? What factors do you believe will influence uranium prices in the coming years? Leave a comment below and share your insights. In the next segment, we'll dissect Denison Mines' recent financial performance and analyze its competitive advantages in the uranium mining space. Stay tuned. Let's take a closer look at Denison Mines' current price of $2.23. This sits comfortably below the Analyst's mean target price of $3.09, suggesting a potential buying opportunity for some investors, especially considering the recent impressive performance. DNN has seen a surge of 90.60% in the last year and a 23.89% increase in the last 3 months, highlighting strong investor interest. Furthermore, the stock is only 9.72% away from its 52-week high, indicating a positive overall trend. Now, let's examine Denison Mines' earnings per share. While they don't currently have positive EPS, the projected growth for next year is a scorching 51.63%. This significant increase suggests that Denison Mines is on track for substantial future profitability. It's important to remember, however, that high projected growth is often factored into the stock price of companies in the development stages. We'll need to consider Denison Mines' valuation in light of this impressive EPS growth projection. Finally, let's not overlook Denison Mines' profit margin. Their current profit margin sits at a healthy 489.16%. This indicates that Denison Mines is efficiently converting their revenue into profits, a positive sign for their financial health. While this profit margin might be based on a smaller revenue stream, it demonstrates their potential for significant profitability as their operations scale up. Denison Mines' financial metrics present a compelling case for their potential growth. However, is it all sunshine and uranium deposits? Denison Mines recently announced the successful completion of their inaugural ISR field test program at their 25.17% owned Midwest Uranium project. This program represents a significant breakthrough for Denison Mines, as ISR offers a more environmentally friendly and potentially lower-cost method of uranium extraction compared to traditional mining methods. The program involved drilling 10 small-diameter boreholes within the Midwest main deposit. This meticulous approach allowed them to gather a wealth of data: geological, hydrogeological, geotechnical, and metallurgical. This extensive dataset will be crucial for validating their previous conceptual mining study and determining the feasibility of using ISR mining at Midwest. Importantly, Denison Mines didn't embark on this ISR adventure alone. They collaborated with Urano Canada Incorporated, a subsidiary of the Urano Group, a globally recognized leader in the nuclear materials field. This partnership brings a wealth of expertise and experience to the table, further strengthening the potential success of the ISR project. The location of the Midwest Uranium project adds another layer of intrigue. Situated just 25 kilometers from Denison and Urano Canada's existing McLean Lake operation, the Midwest project could leverage existing infrastructure and processing capacity. This strategic advantage could significantly reduce costs and expedite the development timeline. The successful completion of the ISR field test program is a major milestone for Denison Mines. As with any investment decision, it's wise to consider the perspectives of market analysts. Denison Mines currently enjoys an average brokerage recommendation of 1.83, which falls between strong buy and buy on a scale of 1 to 5. This suggests that a majority of analysts view DNN favorably. However, it's important to remember that analyst recommendations should not be the sole factor driving your investment decisions. We'll discuss the reasons behind this caveat in a later segment. Moving on to the world of technical analysis, Denison Mines has been on a tear since bottoming out in June 2023. This uptrend is a positive sign, and even more encouraging is the fact that DNN has held strong support at its 50-day and 200-day moving averages. This indicates potential buying pressure at these key technical levels. The recent pullback to $2.02 and subsequent rebound further highlight this support. With the stock currently trading around $2.10, some analysts believe a test of the $3 mark could be on the horizon. Adding fuel to the bullish fire, Denison Mines President and CEO, David Cates, recently shared some encouraging insights. He highlighted the significant appreciation in value of Denison's uranium holdings due to the positive sentiment in the uranium and nuclear energy markets. Furthermore, their strategic decision to avoid low-priced uranium contracts positions them well for potential future scarcity, potentially allowing them to sell their uranium at higher prices. Analyst opinions and technical analysis paint a promising picture for Denison Mines. However, there's more to the story. The uranium market itself is a complex ecosystem. Geopolitical tensions, supply chain disruptions, and global energy policy all influence uranium prices. While the current outlook is positive, unforeseen events could disrupt the market. Denison Mines isn't without its own challenges. As a development stage company, they are not yet generating significant revenue, and their reliance on future uranium prices adds an element of risk. Additionally, the ISR mining process itself faces regulatory hurdles that need to be cleared. While the potential for Denison Mines is undeniable, patience might be the most valuable commodity in this scenario. Let the dust settle on the ISR program's regulatory path, and allow the uranium market to solidify its trajectory. In the meantime, keep Denison Mines on your radar. Their innovative approach, experienced leadership, and strategic partnerships make them a company to watch closely in the ever-evolving world of nuclear energy. The future of Denison Mines is a story waiting to unfold. We want to hear from you. Do you believe nuclear energy will play a significant role in the future? What are some of the key factors that will influence uranium prices in the coming years? Leave a comment below and share your thoughts. Thanks for joining us on Stocks Telegraph. If you enjoyed this analysis, don't forget to like and subscribe for more in-depth explorations of exciting investment opportunities in the dynamic world of resources and energy. Until next time, happy investing.